This is the Watchman giving a clarion call. And for those who've been watching the metals charts lately, you've seen some pretty big price swings. What's up with the recent surge back toward $20 silver and 1350 gold, and their near instant plunges again from those levels? Well, I'm going to get to that in a second, but firstly, let's remember what's happened directly before this recent price schizophrenia. Many of you will remember that I wrote an article a month ago on my site, thewealthwatchman.com, called This is What's Caused Silver and Gold Buyers to Hold Their Fire. Now, in that article, I detailed how precious metals had made a short move that was so fast, so furious, that they needed time to catch their breath. I also showed how precious metals sales had slowed because many of the big moneyed buyers were wary of the possibility of a decent sized pullback, especially with the big banks having a record number of shorts on the line against them. Now, at the time I wrote the article, silver was $20, and I said several things at that time. I said that a pullback to the 18s at least in silver was likely, and that's just what happened. I said that I would become a buyer of silver again once we reached those levels, and I did. I used my dry powder to purchase silver around 1850, which turned out to be the short-term bottom. And lastly, I said that the big banks would try to cover as aggressively as possible on their shorts in that coming drop that was going to be manufactured. And they did cover them. But here's the key. Those banks didn't cover a fraction of the amount of shorts that they needed to get out of the danger zone. Now, what do I mean by that? Well, Ted Butler, who tracks the open interest action, the contracts buying and selling by the commercials and speculators on the COMEX, he's been watching the commercial bank short seller position very closely, and he said a month ago that the banks who'd gone short for several weeks at that time were underwater in those short positions to the tune of over $3 billion. Now, that's a hefty chunk of change. Even for a few large commercial banks, that's a lot of money. They'd taken silver and gold back down to try to cover those shorts, but never got silver below the 18s. After that point, the price catapulted upward again as big players came into the paper, silver, and gold markets and really began going for it, buying longs on heavy, heavy volume. By the way, as of August, the physical sales of the metals are still lower than we've expected over the last several years. So this rally really seems to be generated by those jumping into the paper contract market. And that's okay with me. Hey, if the rich players want to drive the prices of my metals higher by taking all the risk on themselves against the banks to do so, that's no skin off my nose, right? Let them go for it. Let them knock themselves out. So just in the past few weeks, the silver price has gone from 20, to 1840 to back again as high as $20.12, which we saw on Wednesday. Nearly a full $2 move in the past 2 weeks upward, culminating in that beautiful spike on Wednesday. But something else very important happened on Wednesday, brothers. You see, the silver price also climbed above the 50-day moving average once again. A big deal, Watchman. Who cares about moving averages? A lot of folks that are a lot richer than you are. The big traders, the trading algos, and all the speculators, they're all watching those moving averages for confirmation of another breakout before they throw in their money. And let me show you why that's such a big deal. This chart here is by the excellent Craig Hemke at tfmetalsreport.com. In this chart, he shows you what happened the last 3 times silver crossed over that line, that 50-day moving average. Time after time after time, it resulted in huge price rallies in very short periods. But just take a look. In February, crossed the 50-day moving average. Boom! 12% move in 2 weeks up. In April, once more, it crossed the 50-day moving average. Boom! Again, 16% move in 3 weeks. And again back in June. Boom! 23% move upward in 1 month. And now once more, silver kissed just above that 50-day moving average. And this is why we saw the bank step in aggressively after Wednesday to repel silver from that $20 level in such a violent manner. If silver closes above that moving average again, just for a few days even, we will see another panicked move up as the small and middle-sized shorts are squeezed like oranges in a juicer. Now, Ted Butler has recently said that he believes the commercial banks are still roughly $3 billion in the hole. They got it back down to maybe 2.7, 2.8 billion over the action of the last week. But then as it came back up, the price came back up, all of that relief action for them was negated. They are still back where they started as far back as a month ago. And $3 billion, even for them, is an enormous sum of change. So if silver crosses $20 with conviction and stays there for several trading days, it likely will explode upward again, and probably for an extended period of time. You'll notice those last three rallies were each longer than the last. And the banks will be faced with two nightmare scenarios. One, either throw in the towel and start pitching their shorts along with everyone else and cause the silver and gold price spikes to go even higher, even faster than they've previously gone. Think the 2011 type spikes in silver, resulting in even more sums of hot trading money jumping into silver and gold with both feet as the momentum attracts new sharks who smell blood in the water. And the action and urgency will feed on itself. It will become a virtuous cycle that carries silver upwards in huge stair-stepping processes. In this scenario, I would expect silver to perhaps even hit $26 again within weeks, within several weeks' time. It's possible. Or scenario number two, they could be the chump holding the bag, and all the banks could go up and buy billions of dollars in new shorts that all the small and mid-sized parties are pitching. In this scenario, as all the new longs come in, the bankers would literally become the seller of only resort against all the new longs to try to soak up all those new longs by going short against them. And they would do it probably all alone and probably for weeks. Now, this isn't a good scenario for them either, because this would mean that silver's price would likely pop to around $22 at least, or higher, leaving them for weeks with losses of maybe $5 or even $6 billion. So, if silver closes above 20 with gusto, the algos are going to kick in, and the amount of cash thrown into silver will be huge. So now you see why the banks felt they had to repel silver from that $20 mark this week. They mustn't allow silver to stay above its 50-day moving average for long, which is currently around the $19.80 mark, or they risk losing several billion dollars more on top of the $3 billion in underwater short positions already. Now, I want to give one last caveat here, brothers. I'm not saying that a close above the 50-day moving average or $20 will happen for certain here in the short run, but simply that it's a likelihood. If the banksters decide to throw in everything in the kitchen sink to forestall silver's advance with everything they've got, then they likely can cap it again for a time. But if they don't do that, if they are put in a very difficult position, they may decide to cut their losses and run. And if that happens, watch out above. We will see further serious bullish action. If silver starts punching through there, if they start punching through the 50-day moving average, which is the key, keep an eye on that and the $20 mark. Look out above because it is going to get real. But if our enemies are determined to fight it, then you will see these weird, crazy price swings for the time being and for the next several weeks on. They may decide to try to take it back down again. And that carries its own risk because if they cannot successfully drive it back below the 18s, they could be stuck holding an even larger bag of losses than they already are. But our enemies at the present time seem determined to fight this silver bullish onslaught, and they've got serious money on the line. They're a cornered rat, and we all know that cornered rats are dangerous and that they will do desperate things. So be hopeful, but also be wary because it is not a guaranteed thing. But this is what's at stake, and this is why you will see these fluctuations and what could happen in the days ahead. So stay tuned and just watch those levels very, very carefully. This is the Watchman signing out. Stay vigilant and bring the fight to them.